What a week. What inflation? Equities and long bond treasuries rallied this week, so what gives? Well, here's what Rick Santelli from CNBC had to say yesterday as the jobs report came out.
Interest rates, they always divine whether the report's good or bad, weak or strong. Well, interest rates are moving lower. As a matter of fact, as I'm speaking, we've just breached the 460 in a 10-year. We're trading at 456. How intense is 456? Well, we settled at 484 last week. 484 last week. That is something to pay very close attention to. We see that the pre-opening equities, as evidenced by the Dow futures, is moving higher.
To put some more context about what's going on, a couple of weeks ago I said, look, there's more to inflation than growth and high demand for labor. If productivity increases, then companies don't have to raise prices to cover the increased labor cost. Why? Because they're getting more out of their people for the same amount of time. And look, we're currently in a major transition to artificial intelligence and other productivity-enhancing technologies that are causing productivity increases like our modern economy has never seen before. No one except Cathie Wood seems to get this. And here's what Cathie Wood had to say about it in her video published just yesterday. Link in the pinned comments below.
Okay, so now let's go on to market indicators. I tweeted about this one because sometimes you have to step back from the day-to-day and gain perspective to understand where you are, and in the case of commodity prices, where they are. So the index, this is index to 100, which I think was a 1980 number. And look where we are. We're back where we were in the early 80s. The commodity prices have gone nowhere. And if you want to look at recent times, sure, you can see the supply chain shock that we went through that took this metric up from roughly 60, roughly doubling it, 60 to more than 120. But it's coming down now. It's down more than 25% from its recent peak. And if you look at it again, perspective is everything, since the 08-09 crisis, you'll see that it is in a downtrend, deflation. Most people don't understand this. The Fed certainly doesn't seem to understand it. So we do not think the greater risk here is inflation. Commodity prices are the first place you'll see inflation brewing. And commodity prices are determined at the margin. This chart, this evidence would suggest that has not happened. It is not like it was during the 70s. Look what happened. We got into the double-digit range here, where we've just reversed. And I think this was an important indicator for the Fed this week. And I think they're a little bit more on high alert that they may be making a mistake here. They won't say that their vote this week was unanimous to hold for higher and pay attention to the data. Okay, so we'll pay attention to more data here, and we'd love the Fed to pay attention to this one. This is metals. These are two indexes. Metal index divided by these are prices. Metal price index divided by the gold price index. So you can see a big disconnect recently. The green line is telling us that metal prices are going down relative to gold. The purchasing power of gold is going up. That says we do not have an inflationary situation here.
As you can see from Cathie's analysis, there are really strong indications that inflation won't be an issue going forward. This should really bode well for both equities and long treasuries over the next couple of years if there aren't any unforeseen catastrophic world events. Let's take a look at the markets and the metrics to see what's going on right now. So if we look at how the markets performed over the past week, you can see we've had an extremely healthy rally here. The ARK Innovation finished up 17.2% for the week. That's insane. Followed by small caps up 6.56%, followed by the NASDAQ 100, up 5.7%, followed by the S&P, up 5.29%, and followed by the Dow Jones Industrial Average, up 4.35%. That's a real rocket ship up off the bottom. This looks great. What about over the last month? Well, you can see we had an unhealthy situation here until the bottom, and now we have a healthy situation for the month. So this looks great. What about year to date? Well, year to date, we're still up, but you can see what's happened here. We had a very well-defined bottom here and then rocket ship up. That's usually a good sign coming off of a bottom that you've seen the bottom and that things are going to continue higher. We'll just have to wait and see.
I'm afraid to say how I feel.
And what about the bottom dynamics? Well, if we look at the bottom dynamics, we have a very nice situation here. We had a bottom forming indicator where this orange line got up here in the high 90% range, and the confidence level was rising and was also up here at a very nice range. And then again, we had a bottom forming indication here with a very high confidence level. And then as the market started to go up, confidence level started to drop, but then started to shoot up again. And you can see the bottom confirmation level, this blue line, is way up here in the high 90s, and we have a very high confidence level. So you've got rising confidence, a rising bottom confirmation level, and a rising market. This tells me we're going higher next week. But how does risk versus opportunity look? Well, risk versus opportunity, you can see that risk acceleration is just through the roof. Risk is through the roof, but the opportunity level has sort of leveled off here and is starting to head higher. This is in conflict with what the bottom dynamics are telling us. So it'll be interesting to see how this plays out. But I lean toward the bottom dynamics more than these going forward.
Don't wanna let you down.
And what about equity versus safety? Well, if you take a look at equity versus safety, let's follow the NASDAQ 100 as we always do. You can see it's been a wild ride. And as I said in my video last week, when you have this kind of crazy volatility, it usually indicates you're at or near the bottom. So you can see this was a pretty crazy thing. But what I do like is that from last week to this week, it moved up a notch. This is great. And what about cash? Well, cash has been stubbornly high. It was in first place up here, fell down to third, and now is staying in second place. So this is not great. And what if we look at small caps? Well, small caps have also been volatile, as you can see here, and they're in 10th place, which doesn't agree with some of the other metrics we're going to look at. And you'll see what I mean when we get there. But I'm not going to draw in lines for the Dow and SPY, but you can see they basically stayed flatline for the last 2 weeks. Now, kind of why is this? Well, what's happening here, and we'll talk about this in a bit, is that Treasuries are starting to improve, which is great. So I'm showing you here all the safety assets. So you can see that cash, short-term Treasuries, and intermediate Treasuries are ranked 2, 3, and 4. Gold is still in first place, but it's starting to kind of lose its luster, and you'll see that later. And if we take a look at long bonds, you can see what's happened here. They kind of bottomed out here. TLT started moving higher last week, moved up again, and EDV is moving up off the bottom. So this is good news for the Treasury market, and hopefully this will continue. And how does all of this show up in the buying and selling pressure? So if we look at the buying and selling pressure, you can see that the selling pressure peaked out last week and started to collapse, and the price for the Dow started to move higher. And I think I pointed this out in my video last week. For the S&P, it flat topped, really hadn't started falling yet. But again, the price is moving higher. Now, I did point this out for the NASDAQ 100 because you can see way back here before the bottom, the selling pressure peaked and started to fall down. And I talked about that last week, that looked encouraging. Well, here we are. Now the buying pressure is above the selling pressure. So the selling pressure has been collapsing. The buying pressure has been moving higher. And the price is moving higher. And what about ARK Invest? Wow. Well, you can see the same thing here. I talked about this, that the selling pressure was declining and the buying pressure was increasing. And then last week, the buying pressure just shot straight up here along with the price. This is really, really good. Now, this is in conflict with equity versus safety. You remember small caps were ranked dead last, But you can see we've had a very strong rally here, very almost like what we've seen in ARK, not nearly as strong though. And the buying pressure is moving up very nicely. So this looks very good. So what if we look at sector rankings? Well, these tell kind of an interesting story, and I'm going to keep doing this for a while because you can kind of see the pattern here. Cash was up here in the number 1 and number 2 spot 5 and 4 weeks ago. And you can see the consumer staples, the safer equities, were moving up in the rankings because investors were moving their money into safer equities and out of riskier equities. But what's happened this week? Well, consumer staples have fallen back a notch. Consumer discretionary has gone up a notch. And cash is still up here, but treasuries are kind of falling back a little bit. So there's some emerging companies, and we've got some technology still down here, but they've moved up from where they were last week, and you'll see that in the next slide. Let's take a look at that. So here's last week and this week. So as I was saying, you had the NASDAQ 100 here. It's staying put this week, so it hasn't moved at all. SOX has moved from down here to up here. That's good. ARK Innovation still showing in last place. Now, remember, these take kind of a longer view, and they tend to react more slowly. So there's a fair bit of delay in these. But I think you'll see some interesting changes when we look at sector rank acceleration. So while we're talking about it, let's go there. Let's just go to sector rank acceleration. And you can see that these move a lot more from this graph. So you can see what happened here. Consumer staples moved up here 4 weeks ago, but it's been falling off ever since. And you can see that consumer discretionary was down here, bounced up here, fell back, and is moving higher again. So it's showing a better appetite for risk. Now let's look at last week versus this week. And you can see what's happening here. So consumer discretionary moving up, consumer staples moving down. This is good. I'm curious about why cash moved from way back there all the way up to here, and treasuries moved up here as well. Gold is showing up here. Interesting. But let's take a look. So the Qs were here in terms of acceleration last week, and now they've moved up here. This is really good. Where was ARK Innovation? ARK was here, and it has moved down. Surprising given the performance this week. So this is an interesting metric because it's not just based on change in price. It's based on some other things that are in the mix that cause these things to move around. So that's a curious one. But we had semiconductors moving from here up to here. This is very good. So this is giving somewhat of a mixed picture with cash up here, which is why risk acceleration is through the roof. Not sure how that's going to age, but I'm telling you the bottom dynamics are saying we're going higher. So let's see what happens next week. And how did treasuries do? Well, as I said, what inflation? You can see the treasuries had a very, very nice rally, almost like the equities did. You can see the highest risk treasuries finished the best, up 7.2% for the week. TLT, the 20-year treasuries, finished up 4.63% for the week, and so on. So this is a very, very healthy looking treasury rally. What if we look over the last month? Well, kind of looks like the equities, doesn't it? They bottomed out back here, and then we've had a rally. So we're actually up for the month. This is great. And then if we look year to date, we're still kind of in the doghouse, right? We bottomed out back here, but you can see that things are starting to rally back, meaning that the expectation is that yields are going to fall. And in fact, if these keep going up, yields will fall. So that'll be interesting to see going forward. And how does that show up in the buying and selling pressure for treasuries? Well, I don't know if you remember last week, I talked about the fact that, especially for intermediate, long, and longer bonds, that the selling pressure was declining, and it wasn't really doing so much here. But you can see that short duration treasuries have continued their rally. They've been rallying since way back here. Intermediate treasuries bottomed out here, and you can see that they've been rallying, and the selling pressure, this orange line, has been declining. You can see that for 7 to 10 year treasuries, nice rally here, and the buying pressure above the selling pressure. And then 20-year Treasuries bottomed out here. Nice rally going on. Selling pressure falling and the buying pressure rising and above the selling pressure. This looks really good for Treasuries going forward.
I feel like I'm afraid.
And how about gold? Yep. Well, gold had one heck of a rally here, as you can see. It's interesting. When the war started in Gaza, you can see what gold started to do here. It really shot up, but it's starting to kind of roll off and flat top here. And you can see the buying pressure, this gray line, has been waning and is in fact falling off here. So this looks like gold's starting to lose its luster a little bit. We'll have to see how this goes next week, but it'll be interesting, as always. And what about Bitcoin? Bitcoin has been on a tear. This is great. I mean, you can see that it's been rallying since back here. It's had one heck of a rally. Buying pressure went through the roof, kind of corrected itself here. It can't stay up there forever. It's fallen off, but now it's heading higher again. So this looks really, really good for Bitcoin. As I mentioned earlier, the bottom dynamics are indicating we could see another upward move in equities next week. And wouldn't that be icing on the cake if long Treasury bonds rallied too? Until next week, I'm Calvin Rose, and thank you for watching Invest Smarter. That's all for now.
So you